All right, so in this session, we're actually going to be talking about what we call capitulation and recovery. It's part of the market cycle where we have accumulation, distribution, and manipulation. All right, we're going to talk about that after this, and then I'll just make it clear to you. Now, when we hear the term capitulation, what does it denote? It connotes that there's an amount of panic selling. Let me write that down. Panic selling. People are scared. Panic. There's panic selling in the market. Now, when you see that there's panic selling in the market, you rest assured that a recovery is about to take place. So that's when you are supposed to start buying. One of my mentors in this financial market of ours, Warren Buffett, he said something. He said, when everyone is selling, I am buying. Now, do you know why he said that? It is because of capitulation. Now, emotions controls the markets. Give me a few seconds. Yeah, emotions controls what? The market. The market is not controlled by robots, although we have trading bots, we have algorithms, but those algorithms are fed data. And who feeds them this data? Human beings. All right. Now,
okay.
Because emotions are involved in trading, it becomes even more difficult to predict what the market will do at every point in time. You understand me, right? It becomes quite tedious to actually, predict what the market is doing. But with the help of this capitulation that I'm talking about right now, you will find it very easy to understand the phase of the market. Now, remember we talked about the cycle. Now, we'll just quickly talk about the phase of the market. The market moves like this in this phase. What I'm teaching you guys now is market moves like this in this phase. Comes down again. Now, this is how the market usually moves. You get what I'm saying?
Okay.
Now, this box here now, right? This box here is called the accumulation. And of course, here, we could call it a distribution. All right, this is an accumulation. We have a markup phase where price rallies towards the side. Let's call this our markup. We've not started Wyckoff schematic, but we'll go there. So let's call this let's label it as markup. So let's call this our markup phase. We have a distribution right here. The distribution, and we have the markdown, and a redistribution. Some people might want to call this phase a manipulation, but it is actually a distribution. But in every of the phases, that's the accumulation and distribution, we have manipulation taking place. manipulation of the lows or manipulation of the highs. You can see this
Okay.
clearly. You can see this, how price manipulated this place, caused a break of structure, and price began to what? Fall down. That's why I said I was going to teach other block next. All right, I didn't want to go into this, but I just want to make sure you understand what we're doing to know the phase. So we have an accumulation where buyers are buying, accumulating price, accumulating, and then we'll have a markup phase, price begins to rally, and then we'll have a distribution phase, price begins to come down, and here's a redistribution, price comes down. All right, so just take all these guys out. Yeah. So capitulation on the end of what we're saying is, on the other end of the spectrum, is panic selling. Now, when panic selling happens, right? When panic selling happens, you know the first criteria you're going to see? You're going to see an impulsive move. You're going to see an impulsive move. You know what? Let's just go straight to our chart. Let me show you what I'm saying. Let's go straight to our chart. That's the only thing we have. Well, let me even use BTC to explain this thing very well. Let's use BTC. BTC, Charlie Poppy. Oh, yeah. All right, so we have all our key levels here, Abby. So we have our key levels. Now, look at BTC. This is the weekly time frame. You can see how price moved. You can see clearly, price is moving down. It's moving down. It's moving down. Can you see it? Now, do you notice something that as from this point here, all right, as from this point, price came down, bounced down, and went back up drastically. You take note of this. Take note of this. See it? Price came down impulsively, or price was just tanking down. And it came down to this point, and all of a sudden, price went back up again. Now, this impulsive move, these big moves, is what we call capitulation.
Okay.
So we call capitulation. Is panic selling. Now, do you know why they are panicking? Or do you know why they are selling out of panic? Now, let me show you why they are selling out of panic. Look at, they are practically trading support and resistance. So they discovered that this level was broken. And they started saying to themselves, oh, more, I don't want to lose all I have. You see, this support, this key level was broken. So price began to tank. So immediately they saw this big candle. Hey, all of them shouted. They said, Jesus is Lord. I can't continue this crypto again. I'm going back to the village.
MJ, you're too funny, I beg.
You know why I'm explaining like this? Because this is reality, man.
Yeah, sure.
You are going to be seeing all these things. So you know when to be scared and know when to go into the market. So they saw this big candle and they said to themselves, I said, no, we can't continue living this kind of life. Let us quit.
Okay, because that's like a momentum candle. Yeah.
Yes, they saw it, a big candle, and they said, if I leave this position, I might my landlord will
Go
drive
to
me away from my house. So they started selling, But guess what? The people who are smarter than everybody in the market, you know what they did? They allowed price to come here. They now pushed, the price from here now to this point. Bam. Now we're going to call this an automatic rally. You see it? Price came down. You see the sharp move. It came down and it paused. So we can say this is our selling climax. I'm not supposed to teaching all this now because this is Wyckoff. Price came here and then pushed back up again to this point. Bam! Now, we now have a range. Price is what? In a range now. Now, do you know our range? Our range is going to be from here. This selling climax to this automatic rally. At this point now, price started ranging. Now, all the retail traders, they are all confused now. They don't even know what they are doing. At this point, they are confused. Some are saying, should we sell from here? What if price continues to go up? Another said to say, price has come here, let me buy. Okay, the ones that now bought here, they thought they had sense. They didn't know that they were going to put themselves into a problem. Now, they started buying from here. Now, do you know why price is moving slowly at this support? Because institutional traders are not involved. You understand? This is why you're having small green candles. All these people here, they are retail traders. You understand? They are retail traders, like you and I. So institutional traders are not involved. The whales are not involved. So institutions were trying to push the market, and guess what? They got here and the whales sold off. Now, they sold off. Look at the trap. Let me explain it to you again. They sold off from here, and all the people that were buying, they started saying, let's go start to sell. And guess what? Blindly, they started selling from this candle. Now, the worst thing you want to ever do in life, the worst thing you want to ever do in life, in your trading life ever, is sell immediately after an institutional candle. Don't try it. What did I say? The worst thing, you want to make yourself unfortunate. Don't ever sell immediately after an institutional candle. Don't try it, because this big candle you are seeing here is 90% of the time a manipulation, especially when it has very small wick. It's 90% of the time manipulation. Now, look at the gist. I'm giving you guys the story now. What happened? Now, those people that bought here, those retail traders, can you see the small candles? They thought they had sense. Now they've seen this red candle now. Do you know what they will do? They will switch position. Instead of buying, they will now start selling. They will now open sell orders from here. And do you know where they are? Do you know where they will put their stop loss? They will put their stop loss above this candle. Now, the institutions will step into the market. Since because they have a database where they monitor all your open orders, they know where you are putting your stop loss, my dear friend. So they are going to step in with this big candle. You can see how big this candle is. This is an institutional candle. They will step in, swallow all your stop loss. Now, that stop loss is what we now call liquidity. Now, that stop loss that all the retail traders have put here is what we now call liquidity. They've put their stop loss somewhere around there. Let's illustrate it with the dollar sign. Now, this is the reason why I trade this pattern all the time. If you are very familiar with me, you know by now that this is the only pattern that I trade.
Yes. Yeah, you call that every time CHOC, change of character.
No, this pattern, this one here is called a recovery. This pattern. Now, stop losses have been triggered. The market now has enough momentum to push the price higher. Guess what? Price went from here. Now, at every point in time, we are going to be seeing this particular schematic. You're going to see it on Ethereum. You will see it on lower time frame. You will see it on every time frame. Look, the market is fractal. in nature. When I say the market is fractal in nature, it means that what you see on the weekly time frame, you will see it on the daily. You will see it on the 4 hours. You will see it everywhere. The bigger picture is a clear representation of what we have on the smaller picture. Okay, now let me prove that to you now. Let's go to daily time frame. Can you guys hear me?
Yes.
Yes, sir.
Okay, let's go to daily time frame now. I want to show you something. What we are saying, look at it. Can you see it?
Yes, sir.
Can you see it? You see the recovery?
Yes.
All the stop losses have been triggered because they believe that, oh, let's put our stop loss here. It has been triggered.
Jamumu never too much.
You see now, because people know these things now, you are laughing at them. You were once like them. Okay, now, look, that's it for that. Now, even where we are currently now, oh, look at it. Where we are currently, right now, let me show you. Let me go to, this is BTC now, where we are at the moment. Are you seeing that this thing now still wants to happen again? This same pattern is still playing out again.
Mm-hmm.
Are you seeing it? It's still playing out again. This same pattern is still playing out again. So they sold from here. Price will definitely come and take out their stop loss. So when price comes and takes out their stop loss, which most likely they must have put here, price BTC will go to 48K. From 48K, it will go to 53K. Whether the devil likes it or not, BTC must move. America cannot stop it. All right, so basically, this is what we call capitulation. Now, capitulation just simply means that there's panic in the market. People are panicking. Maybe price just went down instantly. Then the next thing they start doing, they start panicking. Hey, God, all my investments, God. Let me make I just sell, make it not be like say I lose everything.
Mm-hmm.
And once they start selling, be very honest. When you saw this candle, what did you think at first? Sure, you people said BTC is going to 30K. You said, most of you said BTC is going to 30K. No. It doesn't work that way. This market has capitulated already. So those people now that open sell positions from here, because some of them still believe that the price of BTC will still follow. But they are not seeing this thing that we're seeing now. They are not seeing this thing.
It's a setup, it's a trap.
It's a trap. They are not seeing it. And do you know why it's a trap? It came out just after this thing recovered, just after the FOMC meeting yesterday. That's the Federal Open Market Committee meeting held in America yesterday. It came out after. So everything is planned. Your own duty is to trade alongside these guys. That's your own duty because you're already seeing it that, oh, these guys have capitulated this market. So let us wait now for a break of structure. Once we get a break of structure and a retest on this place, then we can now say, okay, yes, we know what these guys are up to. This same pattern will form on every time frame. That's why I said you may not necessarily need to trade with chart patterns. All those things are for retail traders.
Yes.
Are for retail traders. So the market, see, let me tell you guys something. The truth is, this market, it's positioned to ensure that retail traders create liquidity for the market. When we go into smart money fully, you guys understand what I'm saying. It's what we call inducement. Now, all those chart patterns that you've been taught, That's why I really did not want to teach you guys, because those things are very useless. Those chart patterns that you have been taught, all right? They've only taught you so that you can create liquidity for the market. They have only taught you those things so that you can create liquidity for the market. Because they know how you think. They know how your emotions run. Whenever you see a big candle like this, the first thing that will come to your mind is to run and go and buy. Abi? Can you hear me?
Yes, sir.
I said the first thing, whenever you see this big candle, the price one pump, you go and buy. Oh, I pity you. Whenever you see a big institutional candle, don't enter the market. Oh, I take God beg you now. Hey, don't worry. This thing I'm telling you now, it took me over 1 year to understand it.
I see.
When you see an institutional candle, do not enter the market. Oh, you have to wait, be patient. You have to be what? Be patient. I'm saying this thing now, I know why I'm saying it. Some people will see this candle you are seeing now is called FOMO. FOMO.
It's a trap.
You know what FOMO stands for?
Yeah.
Okay. What does it stand for?
Fear of missing out.
Good. This is FOMO. FOMO. They will push the price one. They know how you think. They know that, oh, you will be very excited.
Christmas on sure.
They know how it's self-psychology, it's a psychological thing. So they know how you think. So once they put the price up like this, dumb traders will go into the market. But because you are smart and you trade SMC or you trade like a smart trader, you have to wait and wait for the next move that's about to happen. Now, look at what I've been saying all along. Look at it, look at it, look at it. Look at now, we have a range band. Yeah, I have a range band here. Look at this market. This market. Look at the capitulation I was talking about. Now, they started selling from here. Look at, we've taken up their, I gave this as a signal. This signal is going to do very, very well because we're going to move from here to this point. All right. Now, you can, hey, have you guys funded your account?
Yes.
Mike.
Yes.
Okay.
Yeah, don't worry.
See the same thing that we're actually talking about. Look at it. The same thing happening again. Look at it. Just look at it. Look at the range. All right, look at the range. All of a sudden, price started tanking from here. Look at this capitulation. You see this capitulation? Good. See this capitulation happening here. A very wide one.
Yeah.
See it?
Yeah.
Brilliant. Capitulation now. All the retailers, they must have put their stop loss around here because they are not smart. They must have put their stop loss somewhere around here. Now, this becomes liquidity. Do you see the big candle that came up to drag all the stop loss away?
Yes.
See this big candle is the same thing we saw for that BTC just now. Now, this candle has swept all the liquidity, meaning it is institutions that have stepped into the market now.
Okay.
Are you getting the dynamics? Are you getting it? Are you getting it at all? Meaning it is institutions that have stepped into this market. It is no longer retail. Retail is not present here right now.
Okay.
I can prove it to you that retail has nothing to do here. Let me put my volume indicator now. You're going to see. Don't trade with indicators, but you can use your volume indicator. Are you seeing it? Are you seeing this big volume? Meaning institutions have stepped in. This has nothing to do with retailers. This is purely institution. Purely what? Institution.
Yeah.
You can see wicks. You can see these wicks, meaning there's rejection. There's rejection here. And guess what's going to happen next? Price is going to what? Price is going to take out this top of this liquidity. Create another liquidity here again. And you are going to see something like a double top. I'm just showing you what will happen. I'm showing you this is prophetic administration, prophetic analysis. So you're going to see another liquidity will be formed here. Now, do you know why another liquidity will be formed here when price gets to this point? Mark my words, it will be formed here. So that you will see a double top. And then traders will not think, oh, finally, the market wants to come down. Oh, I pity you. So you're going to see something like this now. You're going to see something like this. Price will come here. And do you know what they will do? Traders will now set another liquidity again. Oh my God. They will now set another liquidity by putting their stop loss here and attempting to short the market. They will put their stop loss somewhere here. Attempting.
Institutional candle will come and bust.
They will think that, oh, the market wants to fall. The market will retrace, so it will go down like this.
Sure.
Then before you know it, boom.
Got their stop loss.
To take their stop loss again. And when this now happens, price will now have enough liquidity to come back and retest this key level here. Because this is where it wants to go to. The thing is, institutions know where they want to drive price. They want to drive price to this point. But they need retail traders to create liquidity. So so what they need to do now is to deceive you into going into the trade so that you put your stop loss where they can what? Buy or sell
manipulate
at the best prices.
Come and collect. Come and scrape your stop losses.
All right. So basically, that is all for tonight's session. That's all for
wow. This lesson is interesting.
Yes.
So the next session we'll talk about other blocks, and then we'll start talking about SMC. Basically, I just want you guys to know what those other blocks are, so that you can be able to point your entries better. All right.
MJ, I have a question.
Go ahead.
This
now.
this period of capitulation.
This is husband and wife time. Look at the time.
Yeah. So this capitulation place here, can we is it what it's called when the market is moving sideways, bilateral market?
Yes, this is consolidation. This is a consolidation.
Yeah, that's sideways consolidation. Yes.
Yeah, consolidation means sideways now. If the market is in no direction, but this market we have here now has direction. Is going up.
Yeah.
So if you catch this from the weekly, you are going to make a lot of money from this trade. I've given it as a signal already, so I'm just waiting for
a retest.
You are going to see on all time frames, you will see the same thing. That's why trading is very interesting. You are going to see the same thing across all the time. If you go to 15 minutes, you will still see the same thing. See it now. Look at it. Look at what we're saying. Look at the capitulation. This is 1 hour. Let's go to 15 minutes. You will see the same thing. Are you not seeing it? The same thing.
Yes,
look at the range. Look at the capitulation here. So that's why I said the market is fractal. And the fractal nature of the market is what makes it very interesting. It's what makes it very, very interesting.
Fantastic.
Yeah, it is. So from here now, the 15 minutes, you can put your stop loss here because the market is fractal. You don't need to put your stop loss far again. You just simply put your stop loss here and ride this market to the upside. And you are perfectly good to go, good to go, good to go. This is called a reaccumulation. Anyway, I'm going to leave you guys right now. We'll continue
All right.
in our next session. God bless you.
Well done,
Thank
sir.
you, boss. Yes.
Thank you so much.
Thank you.
Okay.